But before we get into it, I just wanted to say a couple of things about the role of multilateral development finance institutions. Now, as we know, Africa has many needs, but the last 2 years has really shocked the system for obvious reasons. I was just looking at some data concerning how much financing has come from multilateral and bilateral institutions going into infrastructure, specifically into Africa. And according to Baker McKinsey, that number has dropped actually from about 55 billion in 2019 to 33 billion. But what I think is very significant is that that number was 100 billion in 2014. So clearly we're not moving in the right direction in terms of the quantum of the investments that we'd like to see. Now we know, as I mentioned, the last 2 years have been very challenging, but hopefully things get better as we move forward. So I'd like to start with you, Solomon, if you can just give us some perspective on this point. The COVID-19 pandemic has obviously delivered huge challenges to businesses. The public and private sector have had felt their share of the pain. But let's speak about multilateral institutions and how the pandemic has impacted your business, maybe from a capital point of view and your activities in general. So can you just give us some color in that?
Thank you very much, Wole. I mean, so the clear answer to your question is that for the MFIs that were in capital raising mode, their capital raising activities have been impacted in a varied sense. However, in terms of really the activities, the initiatives of the MFIs, especially as it relates to what brings us here today, which is really around intra-African trade, I would say that that has not waned and that continues. For MFIs, part of our role is to be counter-cyclical, which means really as a result of a pandemic, we need to scale up to compensate, for the disruptions, across the financial system. That may be where, in some cases, we haven't really achieved the counter-cyclical scale that we hope to achieve to continue to support Africa, not only in terms of intra-African trade, but across the economic development agenda. Let me talk a little bit about the African Development Bank, and then I would also talk about how we may have impacted some of the African MFIs, because we are equity investors in almost all the African MFIs. So in terms of the African Development Bank, fortunately for us, in 2019, right before the pandemic, our shareholders and the organization agreed to a very transformational equity capital increase from $90 billion to about $210 billion. So that was significant, and that was right before COVID. Also, the moment COVID happened, we went to the market and we issued a $3 billion Fight COVID social bond, which at that time was the highest US dollar denominated social bond ever issued in the international capital markets, showing very clear confidence in the African Development Bank in terms of really our role to help Africa in addressing the COVID-19 pandemic disruptions. We also went further. We set up an up to $10 billion crisis response facility. In our case, we work both with governments and also with private sector, which is unlike most of the other MFIs represented here today. So we set up a $10 billion crisis response facility. Finally, in doing all of this, we had to be very careful to make sure that our AAA, our international AAA credit rating was not adversely impacted. And I would like to say that, our AAA rating has been affirmed, by all the rating agencies with a stable outlook. And this is also very important because African governments who we serve, right now have limited fiscal space, high debt service burdens. So it's important that we are able to raise capital at the cheapest rate and transfer these benefits to our member governments, across Africa, as well as to the private sector that we invest in. So this is the case of the African Development Bank. However, the African Development Bank has an impact really on the broader Africa MFI system because, as I said before, we have equity investments in almost all the MFIs. Given that we made a strategic decision to pivot to really support African governments during this pandemic emergency period based on health, to reinforce health defense systems, to support MSMEs, which are the most vulnerable, private sector, and also to provide social safety net to the most marginalized groups. And in addition, given that we had to really, do everything to maintain our AAA rating, one of the impacts is that we had less resources to support, the capital raising efforts of the African MFIs that we're already equity investors in. However, this is the time to turn that around. It's been really, over 18 months to 2 years. And so, Serge, we plan to make an investment in Boade. At Masu, we plan to participate in the green shares as well to support. And in addition, we plan to also support Africa 50 because that's part of our role as well. They're already doing what we invested in them to do, but the idea is to also help with the recapitalization to scale up their efforts during this pandemic period. So overall, we continue to actually do what we plan to do, and we plan to scale it up in terms of intra-African trade. Between 2020 and 2021, we plan to invest about $2 billion in CFTA-related activities, and we plan to also mobilize from partners another $2 billion. So we're talking about $4 billion, worth of investments and financing in CFTA-related projects, which would be the regional infrastructure projects, industrialization, et cetera. So our activities continue. I did hear a little bit about, the last panel talking about youth investments and also investments in women entrepreneurs. We have what we call the AFAWA program, where we plan to invest $5 billion in women-owned businesses over the next 5 years. We're pioneering, the youth entrepreneurship investment banks because we look at youth entrepreneurs as an investment asset class and not really, an empowered or an empowerment group. And of course, given that we've just finished with COP26, we would all appreciate that building client resilient regional infrastructure and infrastructure across Africa is going to be essential. So Wole, the news is positive. It's not negative. Yes, there might have been some minor disruptions at the beginning of COVID, but definitely some of us were able to actually continue our significant activities during that period, and we plan to scale up now. Thank you.
Thank you very much, Solomon. Very comprehensive insight into your funding and how that is evolving. But we do actually have joining us virtually Mr. Sidi Tar, or Dr. Sidi Tar, the Director General of the Arab Bank for Economic Development in Africa. So Dr. Tar, thank you so much for joining us as well this, it's probably afternoon where you are now, but give us your perspective on the role of multilateral development finance institutions, and perhaps speaking specifically about your role and how you are intervening in your member countries.
Thank you very much. The Arab Bank for Economic Development in Africa is working with all these institutions. We do believe in partnership, and we do believe we cannot perform any substantial action without the partnership of all our partners who are sitting in this panel and elsewhere. So basically, the bank has been established to foster economic and social development in sub-Saharan Africa. And we do believe that the bank has been working in partnership with all these institutions to provide substantial support to African countries. As far as the economic integration of African countries, the bank is supporting the economic integration through three main areas. First, through infrastructure. And the bank is proud to have contributed to the financing of more than 200 road projects linking African countries, and particularly the landlocked countries, and bringing goods and services and letting goods and services moving across Africa. The bank also has been active in supporting port projects, as well as some railways projects and many airport projects. The bank recently also get interested in supporting the infrastructure, the digital infrastructure. As you know, COVID-19 showed the importance of developing the digital infrastructure in Africa to make it easier for people to communicate and exchange during difficult times, such as the pandemic we have just been witnessing for a couple of years. So we are working with Smart Africa to develop two main operations, which has great interest for the continent. One is the One Africa Network, and the bank has provided a grant for the feasibility study of this continental project. And the second is also to develop an African cloud. And we have also recently provided a grant to Smart Africa to fund the feasibility study. And we are ready to provide substantial resources to the implementation of these two continental projects for the transformation, digital transformation of the continent, and as a contribution to the Continental Free Trade Agreement. A third area, which is very important, and I would like to congratulate Afreximbank for taking the lead in the payment system. As you know, one of the main impediments which hamper the development of trade, intra-African trade, is the issue of payment. And the system which has been developed by the Afreximbank, the PAPS, the Pan-African Payment and Settlement System, is really a great solution to support the banking system and to make it easier for any economic operator on the continent to exchange with his partners across the continent. And we at PADEA, we thought it would be also very useful to link this system to another system which is going to be implemented in the Arab countries, which is called BUNA, which is sponsored by the Arab Monetary Fund. And we have been successful in joining the effort of the two systems, and hopefully we will come up with an integration between the two systems, which will enable any business activity in the Arab world or in Africa to exchange with others in the other countries. So one last point also, which is quite important, is the issue of micro, small and medium enterprises. And as you know, these represent quite a significant portion of the economies of our countries, almost 90% of the economic tissue. And PADEA has recently launched a coalition to support micro, small and medium enterprises in Africa. Why a coalition? Because we noticed that almost any institution working on the continent has an initiative to support micro, small and medium enterprises. But when we meet the micro and small and medium enterprises, they do believe that they are not really reaping the benefit of these initiatives. Why these initiatives are not efficient so far? Because each institution is working in silo. So what we need is to provide a holistic approach and to provide an integrated solution which will enable the micro, small and medium enterprises to get the financing, but also to get the guarantee, to get the coaching, to get the support, to get market access, to get the digital infrastructure, and so on. So we need to sit all around one same table and put all our effort jointly to better support micro, small and medium enterprises.
Right.
Thank you very much.
Thank you very much, Dr. Tar. Really appreciate you joining us for this session. I'd like to go now to Mr. Ekwe. You are the president of the West Africa Development Bank. And for me, success with this question is after this session, many people should be asking you for your business card. So my question essentially is to appreciate a little better how COVID has changed your role in terms of how you're supporting businesses. Can you just speak a little bit about that?
Yeah, thank you. Thank you very much for having me here, and thank you for your question. The thing is, in such situations, crisis situation, when a crisis occurs, there's one lesson throughout the history. The first lesson is, first thing being first, the first lesson is to consider that cash is king. Cash is king, liquidity is king. If you take the example of a number of central banks repurchasing program for the past years, in a few words, you look at the US, the Federal Reserve has been repurchasing assets up to, read my lips, up to 20% of the US GDP, which is approximately 4 to 5 trillion US repurchasing program. Assets, again cash. If you look at the European Union has the European Central Bank has reinjected, again through the same mechanism, assets against liquidity up to 1.6, 1.7 trillion US, which is approximately 10% of the European GDP. And when you translate this into our word, we have considered that cash being king, we had to inject immediately fast disbursement. That's what we have done for up to 500 million euro. Immediate disbursement accessible either to the sovereign, to the public, and to the private sector. Immediate, so cash, so that we can refuel the engine and make sure that we keep the ball running. This is the first thing. The second thing is, and which is basically our fundamental role that's been described into our strategic plan called Joliba Plan, the name of this river, gathering almost the eight countries of our region. Basically, the idea is to foster the development on 5 major sectors, which are, and that would not come to a surprise to anyone here, which are infrastructure. Today, as we speak, we have like 7% of our balance sheet dedicated to infrastructure as a whole. Now, so infrastructure, one. Energy, and we have decided...
Sorry, did you say 70% or 7%?
70%.
Oh,
70.
1 7, okay.
70.
Right.
So then energy. And again, that cannot come to surprise to anyone here. And we have decided to make it a specific goal, because no development without energy. That's an obvious goal, right? The third thing is agriculture, with the two extremes. The first one being food security. The second extreme being agribusiness and agribusiness. How do we go up the chain? How do we go up the value chain? All right. So that's the third thing. The fourth thing is everything related to real estate, and notably everything related to social housing. Again, when you look at the situation in our region and in Africa in general, you have like the median age of our population, it's 20 years. 20 years. And you know that the population doubles every generation, which means every 20 to 25 years. In our region, we have like 150 million inhabitants. In 20 years, we will be 300 million, which is the current population of the US. So the challenges are huge. So the questions of social housing is critical. The last, but surely not the least, sector is everything related to health and education. And the pandemic, again, has put on the table this idea that everything related to health and education was the battle of the battles. So The last thing I would like to add, if I may,
Yes.
is the question of the strengthening of our Tier 1 capital. It is obvious for all of us, and I think my brothers sitting here and there would agree with me, the question of the equity, the Tier 1 capital is critical. And we need to strengthen that. And I know that from our experience, we know where the money is. We know where to tap the capital market. My brother Solomon said a word about this. We know where the market is, right? We know how to deal with things. Now, the question is, how do we strengthen our Tier 1 capital to fully play our role?
Thank you for that. So I think what I'm hearing you say is that development finance institutions, multilateral ones on the continent, require more capital, and we need to get them that capital. So, Sanjeev, let me hear from you on that point, just taking it a bit further, especially in the context of the pandemic and its impact, capital raising for DFIs right now. What's the experience like? Because one of the things we're trying to take away from this session is to better appreciate where you're at, because the ask is big. Sergio just spoke about the enormous challenges. Many will be expecting that the DFIs will be coming to the table. But on the capital raising side, what would you say about the environment now?
Yeah, so obviously, good morning to everybody, and thank you. And I'm sorry if I'm going to end up repeating a bit of what has been already said, because it's very difficult to hear the other speakers. So, Solomon, my apologies if I say all the things you said. So, you know, there is a beautiful English saying which goes like this, that the more things change, more they remain the same. And I have to confess that the experience that we have had over the last 2 years, post-COVID, and the experience we are going through is very, very profoundly felt in terms of how similar it is to the experience on the African continent for generations, right? And the way I explain it is this, that if you really look at the way the narrative and the reality of the world over the last 250 years has worked, it has worked on this implied principle that the global north knows what it's doing, and the global north is unlikely to face any crisis, while the global south generally don't know what they're doing, and from time to time will need to be helped out. Right? That has been the narrative. And I think the COVID experience turned it on its head, because for the first time in living history, you had the global north feeling vulnerable, feeling scared, feeling anxious. And what that did is it put a very sharp relief into this aspect of the reliance the global south has always had towards the global north. That wasn't forthcoming. For many, many months in the initial period of the crisis, you could see the insularity, the inward-lookingness of the world, which had so much more to offer. So for us on the African continent, I think it was a seminal moment. It was a moment to look at ourselves and say, what is it we can do to sort our problems out? And indeed we have. If you see the evidence out there, I think we need to actually applaud ourselves. Now, how did that happen? So if I may just go into the AFC story, like any other MFI here, I'm sure they'll agree, we had to go very granular, very quickly, understand where the stresses are in our portfolio, where cash was required immediately, where projects could be delayed or deferred, and come to a conclusion.
Right.
After that, we looked at our own balance sheet. We looked at our capital structure, our own liquidity, and we did what I think any responsible institution should have done and would have done. And that is to see whether our rating itself stands the test. Remember, we are very highly rated. We are rated A3 by Moody's. So we actually got a reaffirmation of our rating in the peak of the COVID period. And that then allowed us, beautifully so, to go to the markets with a serious degree of confidence, knowing we knew how our portfolios were doing and knowing that the rating agencies were behind us. And that allowed us to raise, over the last 18 to 20 months, you asked about capital, roughly, I think, $2 to $2.5 billion of new cash. It came in many forms. It came in terms of long-term bonds. It came in terms of Tier 1 capital. It came in terms of Tier 2 capital, but it came. And what it told us is that there is room for the MFIs to work alongside the global capital markets to solve the African conundrum.
Right.
Because credit was obviously being priced out of the market, so people were looking for institutions with quality rating to work with. Now, why do I say this? I want to bring it back to where I started, that this, to me, tells us that if we focus on what is in our control, which is project development, making projects bankable, managing the projects in terms of crisis, money is available out there.
Right.
It's not true that money is not available. And that's where I would stop for now.
If I can just follow on that point, and in the report that I quoted earlier, one of the things that I observed there was that it seems like there is now a trend where funding for DFIs is getting somewhat shorter than it used to be, say, 10 years ago. Would you agree that's the case, as opposed to maybe 18-year type capital is out there? It's now more like 13 years, 12 years, something like that.
No,
Would you
I
agree?
mean, if you're talking about the tenor,
Yes, tenor.
of your, let's call it your...
Because that matters too, doesn't it?
Now, that is not true. That has certainly not been our experience. As a matter of fact, there are buckets of capital out there. There is a short-term bucket. Then there is quite a large growing bucket around what I call Tier 2 interest, where people are interested in putting 15, 18-year Tier 2 capital. And interestingly, there is a huge bucket now under the theme of resilience and climate.
Right. And hopefully we get to that.
And I do want to talk about it a little later if you give me the opportunity. Thank you.
All right, but in the meantime, let me go to the CEO of this International Islamic Trade Finance Corporation, Engineer Wole. Thank you for joining us again.
Thank you.
So let's talk a bit about cooperation with the Arab nations and Africa. How are you working to promote more trade cooperation, and what has been your experience? Can you just briefly speak to that?
Thank you very much. I'm very honored to be with you today, and thank the Africa Exim Bank for their kind invitation. I think MDBs, if we talk generally, they have a mandate, to continue support member countries in good times and in bad times. Enhancing economic and social development is a continuous process. So I think talking about ITFC is the International Islamic Trade Finance Corporation, is a trade-devoted organization that is a member also of the Islamic Development Bank group. We also have one aim is to continue provide trade solutions for member countries. 2/3 is from Africa. Talking about first of all, the organization was very successful to mobilize and finance more than $60 billion since 2008. And of course, Africa financing and programs were almost half of that. So since the beginning, the ITFC actually was established during crisis. We remember the 2008, 2010, and we also had the 2014, the financial crisis. So all over the years, we started building muscles actually to really continue to serve member countries during these difficult times. So when COVID-19 came, the ITFC was quite ready to really support member countries during this very difficult time. Our main concern was, as I said, is to continue to support. The other thing is that Our concern is to really continue to partner with our partners so that we can maximize the impact in member countries during this very difficult time. We have really strategic partners in Africa, in other member countries. Of course, at the top of these partners are the Africa Exim Bank and also Badia, and they are very strategic. In addition, of course, to enhancing our aim was to enhance the synergy among the group. IDB Group is a very unique group where we do see institutions that is devoted for trade, institution that is devoted for insurance and export credit insurance to promote export. And we have also the ICD, which is the Islamic Cooperations for the Private Sector Development. In addition, of course, to the mother company, which is the IDB. The four of us, we do have really good products to offer to member countries. So I think since the establishment, since the start of the pandemic, we've came up with something called the 3R. The 3R program, which is a $2.3 billion package to support member countries during the COVID-19. The first R is the Respond R, where we are actually responding to the pressing needs of member countries in terms of really providing medical equipments and also health services, transferring knowledge through, at that time, was very focused webinars. And then the the recovery period is the second phase, where we are today. We would like to see the economies of member countries come back again. And the third one is the restart, where hopefully this is a longer term package that is going to also support member countries in a longer period.
Right.
ITFC actually, participated heavily in the first and second now, by providing, as I said, almost $800 million out of the 2.5. This is in addition, of course, to its normal program during the COVID-19. So the programs were, as I said, mentioned since the pandemic. We felt that there is a need to go and revisit the strategy of ITFC and to see how we can realign to really meet the needs of member countries. A strategy has been updated many times, but this time we felt the needs of member countries under the uncertainty and this very turbulent, environment. We need really to see also how the needs change. New sectors came in for ITFC, the health sector and also the tourism sector. So we felt that we need to really do a lot in these sectors. The program is very successful, and we have really made sure that it is implemented smoothly. Now, of course, ITFC has, in addition to financing, as I said, we finance about 60 billion, the ability actually to mobilize resources. That's why we try to always have partners, development institutions, financial institutions, in member countries, that we work together to really support both actually the government and also support the private sector. We extended many lines of financing to these financial institutions. In addition to that, of course, we extended trade development packages and programs, events, and believe it or not, everything was really virtual, and we had not had any challenges from any member country. And that's really a testimony that we really appreciate, that ITFC is considered a preferred, creditor, or we enjoy the preferred creditor status in member countries, and I thank them, especially here in Africa, despite of the turbulences and despite difficult times and the high impact of the pandemic. They kept their promises and they kept really supporting ITFC so that we continue to support them in addition. We came up with a number of flagship programs that is very important for Africa. And as I said in the beginning, it was the Africa Initiatives, $1 billion in the beginning, but now we have much bigger program, which is actually the Arab-Africa Trade Bridge, which is also contributing to this very important event, which is the IATF. This bridge, we try to build bridges actually between the Arab and African countries in addition to, of course, supporting the needs of the African countries and needs of the Arab countries through a number of really products, a number of areas, insurance, trade finance, trade development, supporting the private sector, and in addition, of course, to other capacity building programs. The Arab-Africa Trade Bridge actually is one of the biggest really partners is the Africa Exim Bank, and also we have Badia as well. They contribute, the IDB itself contributing, and also we have the support from the other entities, which is the ISEC, and we work with international institutions as well as partners, like the ITC and others, who come together really to implement this multi-stakeholder, multi-partners, program. The program is going well, and every year we see the increase of member countries who are coming to support really this program from Africa and from the Arab countries. The other one is of course, the Africa SME Development Program. Very unique program where we support the SMEs, as I said yesterday, to submit bankable projects, because most of the rejection rates is actually coming because they don't really meet the KYCs and they don't meet sometimes bank requirements. Banks likes to, I don't know if the bankers here would agree with me or not, but they like to go with most of the big companies sometimes. We felt that SMEs constitute a high percentage of the economic tissue in member countries. We need to support them. Not that, but also we train the banks. We extend training also with the banks under the umbrella of the government sometimes, but we extend this tripartite agreement where we can support. Believe it or not, the rejection rates were down from countries like Burkina Faso, like in Senegal, like all these where we really supported the SMEs through this very, very important program. And in the same time, you are offering also training in Islamic trade finance as well, for member countries, so they understand how we operate and how we really, support member countries. And
Mr. Zombo, I'm so sorry. I really have to jump in.
I'm going to close down. Because the subject is quite. But I really appreciate really all the support that we are getting from our partners, and we are, of course, will continue to support Africa, because Africa is really the future. Right. If it is not today, Africa is the future of for the African people. And of course, the CFTA is my final point. We have a very special program which is called the ITFC/IDB African CFTA initiative, where we are supporting 30 activities and projects under this, and also supporting the capacity building of member countries to be able to maximize the benefit from the CFTA agreement. Thank you very much.
All right, thank you very much for very comprehensive review of what you're doing. So we've spoken a lot about challenges, especially with respect to capital. You've spoken about your activities, obviously, but now let's talk about the needs of those who perhaps need your services the most. And I'm speaking about the small businesses across Africa, because as we know, Africa is dominated by small businesses. And the growth of Africa is really will be a reflection of the growth of small business. So, Mr. Tadese, if you can speak to this and about what you're doing at the Trade and Development Bank. As we look forward, what needs to change, or what must you add to the services that you provide with respect to small businesses as a community, the development finance institutions like yourself? If you can speak briefly to that.
Thank you, Wole. Pleased to be here with everybody else on the panel. I think I'll just echo what all my colleagues said. We are partners. We work very closely together across various sectors. And in case you think this has always been the case, it's not quite true. I think today we do so much more together than was the case 5 or even 10 years ago. It's deeper and it's broader. And I think that's a very refreshing development for the continent.
That's true.
The other thing I should just highlight is, we're talking about MFIs in this panel. And the one thing that is obvious is we tend to be either African or Afrocentric MFIs. There's many other MFIs who work in Africa, but they're not on the panel. Some of them are much bigger. Actually, many of them are much bigger than most of us. So what is special about this group of MFIs on this panel? I think what's special is the fact that we're talking very much about trade. And this is what makes this group of MFIs particularly relevant to the issue of the AfCFTA. Because we are very interested in investing in trade, production, and diversification of our economies. This is an area of engagement that really receives a lot of focus from African MFIs. Global MFIs would look at many other issues, the SDGs broadly, the climate finance issues, and also development assistance. But we have that particular premium that we represent, which is supporting African enterprises. Because when you talk about trade, what are you talking about? You're talking about African business. And when you're talking about trade, you're talking about production. Mm-hmm. So the kind of value addition we provide as African MFIs is to address this issue of growing out of poverty. Not development assistance, because that's not really our strength. Some of us on this panel have concessional funding and grant funding, but that is not really the dominant nature of the money we represent. Most of us on this panel are development financiers. And what development finance means is you're financing sustainable transactions, whether they're investment or whether they're trade, they actually repay themselves. So that type of MFI that we represent is very important to the AfCFTA agenda. SMEs are 90% of African businesses. So clearly we all try our best to reach them. But I think one has to be a little bit honest. MFIs, we are continental. Many of us have offices in countries. We try to be on the ground, but we are actually supranationals. We're not firmly on the ground in all countries. And the nature of SMEs is they need local presence in a way that usually MFIs are not very strong at providing. So what we tend to do as TDB, like I think many of my colleagues do, is we provide wholesale support to intermediaries who tend to be closer to the ground and who can deal with much larger volumes of smaller enterprises who need regular interaction. And in many cases, they need local currency solutions, not hard currency solutions, which is what most of us represent. Of course, there's room for both, but oftentimes the SMEs are actually operating in a local economy. It's not exclusively that. We're hoping the AfCFTA will create more opportunities beyond the national economy. But the national banks, the commercial banks in all of our countries are very important players in this area of SMEs. So what we try to do, we throw our weight behind the commercial banks in many of the countries that we work in. And sometimes we'll provide financing, other times we'll provide guarantees, share the risk so that they can do more. They're better placed and more fit for purpose in terms of reaching those smaller players on a more regular basis. But I think all of us on this panel do work with national intermediaries. Sometimes they're microfinance institutions, sometimes they're specialized.
I just wanted to jump in there, and because you are spot on, you obviously are not on the ground everywhere, but the evolution of that relationship with the local partners, how do you see that changing moving forward? Or is it pretty much just an expansion of what you're doing now?
Well, I think the same way I was commenting at the outset, we as partners are doing so much more together than ever before. The same applies to the relationships between us and the national level or subnational level commercial, financial institutions. So there's been a great deal of expansion, right? This is B2B model, it's not B2C, right? So we're supporting other financial institutions. Again, it could be providing liquidity, short-term, it could be medium-term financing, or it can be guarantees to share the risk. That doesn't even require you to provide hard currency. Guarantees is a very smart way of supporting local financial institutions because you're not giving them hard currency that becomes sometimes difficult to repay back. What you're doing is you're telling them, take more risk and we will share the risk with you.
Thank you very much. Useful insight there. I mean, Mano, before I come to you, I want to go again to Dr. Sidi because I think he has to leave us shortly as we begin to round up. Dr. Sidi, if you can just intervene again on the point of about infrastructure. I wanted to hear more about how you think multilateral development finance institutions can support the development of African infrastructure moving forward, especially in the context of driving greater trade. I believe you are muted. We can't seem to hear you right now.
You hear me now?
Yes, go ahead. We can hear you now.
Okay, so to drive more African intra-trade, infrastructure are really playing a key role. As you know, one of the main impediments which hampers the development of African intra-trade is the lack of adequate infrastructure. And all the MDBs have been working on supporting the continent and supporting our beneficiary countries to develop their infrastructure. BADEA, as I said, is proud to have worked with many partners, many other partners, to provide adequate roads in most countries. Today, the situation is also changing because we see new type of needs. We need to develop corridors, and corridors require more financing that what can be offered through the normal business of MDBs. So innovative solutions are required. And part of that is the development of PPP projects. And one of the new area of activity of the bank is exactly to support PPPs in infrastructure, particularly in transport infrastructure, be it toll road or ports, seaport, dry ports, which are also a new type of port which is growing on the continent because of the need to serve the landlocked countries. So our focus in the coming years will be on two main areas of infrastructure. One is supporting those infrastructure which can be funded and which can generate enough income to repay for the loans, and that will be basically through PPP's arrangement. But we will still continue to support publicly funded infrastructure which are basically not financially profitable, and that will be through concessional funding. In this regard, we are working very closely with many partners, and we are mobilizing considerable amount of resources from Arab funds, including the Saudi Development Fund, the Kuwait Fund for Development, the Abu Dhabi Fund, and the recently created Qatar Fund. We are also working with the Islamic Development Bank Group and the OPEC Fund, who are member of the Arab Coordination Group of donors. So basically, for infrastructure, we have this double approach: concessional funding for non-profitable infrastructure project and PPP's arrangement for profitable project in the infrastructure sector.
All right, thank you very much for that useful insight. So Emmanuel, let's go to you. And obviously we were speaking about infrastructure. One very notable infrastructure that the Afreximbank has been driving is PAPS, that Pan-African payment system. I think potentially it will be a game changer in the years to come. Well, let's speak about another need of businesses. And Afreximbank has nicely created FEDA. Maybe you can just speak briefly to what you do, because you're all about providing equity capital and how far you've come with that.
Right. Thank you so much, Wole. So FEDA, which is the acronym for Fund for Export Development in Africa, is one of Afreximbank's value-adding initiatives to the continent. The fund has been set up basically as an impact investing fund. We basically invest in equity, largely, but I'll speak more about our strategy. But our instrument is broad-based. We do invest in equity as well, and can also do that. And I'll speak much more to that. So what are we set up to do? We are set up to, fill the gap that is there from an equity investing perspective. And the reason being that although there are a lot of equity investing businesses on the continent, but you don't have anyone that is specifically focused on trade. And that's what we're set up to do. So we're set up to do three things. Number one, we're set up to support businesses in the intra-African, value chain. So we're basically supporting businesses who products and services, goods and services travel across geographies in Africa. That's number one. Number two, we're set up to support businesses in the what we may call value-added export or export development. So we are saying, for too long, Africa has continued to deal in raw commodities. We want to begin to improve the quality of our exports by adding value. So why should we be exporting cocoa paste and cocoa liquor for so long? We should export chocolate. What about cotton? So there are a lot of products out in the market that we need to add value to. So that's one of the things FEDA will do. The third thing is industrialization. So you find that there are a number of businesses today that are probably importing goods into the continent. We're going to support them through what we do, which is beyond just providing capital, bringing partnership on board to support them sort of begin to move from not just import substitution, because that's not enough, but actually progressing into exporters within the region, which ties into the free trade agreement arrangement as well. Now, in terms of our strategy, we can describe ourselves from a three perspective. First is the equity piece. And the equity piece, we're basically looking at working with third-party businesses, supporting them from an equity investing perspective, because it's been established that in the market, empirically, that the equity funding gap, it's well over $100 billion. So we are there to plug that gap and help businesses. And then we have a second bucket of strategy, which is basically investing in what we call the strategic initiatives of Afreximbank. And these are initiatives that have been identified, to be able to unlock value and also the bottleneck, trade on the continent. So this could be projects around healthcare, projects around quality assurance to support exports, and also projects around industrial parks, which are trade-enabling investments as well. So these are some of the things that we're set up to do. We also have a third strategy, which is credit fund. We basically sets up to partner with other managers to sort of set up a fund. We recently announced our partnership with a manager, and that fund will basically support businesses within the space that the bank is not currently addressing. So whether it's from an instrument perspective, from a time horizon perspective, that very fund is going to basically complement and supplement the business of Afreximbank. So today, in what has been set up to be, at a starting point, $1 billion fund, Afreximbank has seeded FEDA with about $350 million to start. So we are here to support businesses. We put together the team last year, and we've made quite some progress. We've done our first deal. We have about 3 other ones that we've gone through the entire approval process, completed due diligence, and imminently will be announcing. So that's what we're set up to do specifically.
That's quite interesting. But can you just give us a sense of the deal pipeline that potentially that is on the table right now in terms of equity investments?
Yeah, that's a good question. So what we've done between last year and now has been to sort of announce ourselves to the market, engage with the market, begin to develop a deal flow pipeline. And it's actually a very good place to be, where we sit, because we have a parent in Afreximbank, and as you know, Afreximbank's network and Afreximbank's, impact on the continent is one that has created room for us to be able to drive our deal flow. From when we started last year till now, we've been able to create a deal flow pipeline of high potential opportunities that totals over $500 million. So these are deals that we've fed into our pipeline because we're also going to go into the market. So apart from those 3 objectives I told you about, We're also going to end up with foreign direct investment attraction as well onto the continent. So we will be launching our fund, and that fund we're targeting to raise about $500 million. So we
$500 million.
Actually very blessed to have Afreximbank sponsor us and start out this journey with us. And we are very excited about it as a team, and we look forward to this journey with a lot of excitement, because it's a journey to impact Africa. Like I said earlier, this is going to be a game changer on the continent, because it's specifically targeted at a space that has not been given enough attention by private equity firms, maybe because they may not understand the space enough, or from a risk-reward perspective, they may not be resourced to be able to deliver in the trade space. So that is where we are in terms of building a pipeline of deals.
Thank you very much. I'm sure that will be very interesting to quite a few people in the room who are looking for equity participation in their businesses as they go across the continent. We really have run out of time for this segment, but since we have Dr. Sidi joining us virtually, I will allow him to give the final word, maybe a few closing remarks as we round this up.
Thank you very much. I do believe that, as mentioned by my colleagues in the panel, the challenge is quite big, but any institution cannot alone be provide enough solution and enough resources to overcome the difficulties. So what we need is to develop the partnership. And as has been said by Tadesse, we have been working over the past few years to develop the synergies between our institution and to scale up the level of our partnerships. And we do believe that in the future, we need to do more, we need to synergize more, and we need to scale up our activities and to bring as much as possible resources to the continent, be it from donors, ODA, official development assistance, or even private capitals and foreign direct investment. So this is the mandate the Arab Bank for Economic Development in Africa is taking, and our new strategy by the year 2030, which is very much aligned to the Agenda 2063 of the African Union, and of course to the Global Agenda 2030 for the SDGs. One of the main drivers of this strategy is to bring as much as possible capitals from the Arab world to Africa. And we do believe this will be the value addition of the new strategy for the contribution of Badaya to the development of the continent. And we do see already quite a huge potential for the development of this economic relationship between the Arab world and sub-Saharan Africa. And we are quite confident that in the coming years, a substantial amount of direct investment will come from the Arab world to sub-Saharan Africa, and also the official development assistance will be increased substantially. And of course, the trade flows will develop thanks to the development of the link we are working on between the Pan-African payment system developed by Afreximbank and the BUNA Arab system developed by the Arab Monetary Fund. And of course, the joint efforts which are exerted by all the members of the Arab-Africa Trade Bridge, mentioned by Engineer Hani Sumbul, and we thank ITFC for hosting that program. So this program is really a very important program. Afreximbank, Badea, OPEC Fund, and others are working with ITFC and IDB Group to develop this program. And we are also happy to notice that most of the Arab and African countries are joining the program. And this program will contribute to the development of trade flows, and definitely will contribute to the development of African continental free trade agreement in the coming years. Thank you very much.
Thank you very much, Dr. Sidi. Very useful insights from all our panelists. If I were just to summarize, I think there are three key takeaways. For me, the multilateral DFIs on the continent need to be ready to organize themselves to raise capital because that capital is out there. So that's encouraging to know. Then, of course, the partnerships that they have with the local financiers across the continent need to be deepened, and hopefully we'll see a lot more of that. And I think I like the last point about equity participation that Emmanuel spoke of, and the fundraising that he's looking to do along those lines. I think that's quite exciting as well. So I would just say that the DFIs are supportive of small businesses across the continent. Let's engage, and hopefully we can do a lot more. Please, can we put our hands together for the panelists for a very informative conversation?